Hello, passionate Pulse listeners. Pranali here, your host. Are you a business owner looking to amplify your brand's reach? Or maybe you know an expert who deserves the mic? This is your moment. Advertise with us or recommend a fascinating guest for our podcast. Dial at 341 209 0102 and let's make your story roar. Passionate Pulse Podcast, where your tales ignite. Call us now at 341 209 0102. Let's champion the spirit of positive change together.
Are you looking to save on your cloud infrastructure costs? Atlantic.net can help with secure cloud services and HIPAA and PCI compliant hosting solutions. Deploy the latest AI and machine learning models on our high performance GPU computing platform at very affordable cost. Call 888 618 data or visit www.atlantic.net, an official server hosting platform of the San Jose Earthquakes. Atlantic.net, 30 years in business and still growing.
Have you got a passion project that lights you up but needs some more insider tips to take it to the next level? Bootstrap Banter is your new go to podcast. We are all about real talks and no fluff. Just actionable advice and inspiring stories from people like you who turn their passion into a thriving projects and then to startups. Whether you're just starting out or already on your way, we have got the strategies to help you push you through the roadblocks. In this series, you will hear real world strategies to grow without burning out or breaking the bank. Honest, no nonsense advices to help you level up your passion project. Whether it's marketing, scaling, or just finding the right directions, we are here to help you thrive. Book your strategy session today. Go to passionatebuzz.com and contact, or just buzz us on WhatsApp or text us on 341 209 0102. That's passionatebuzz.com, one-stop shop for your Bootstrap Banter. Namaskar, welcome to the Passionate Pulse podcast, Bootstrap Banter series. In the Bootstrap Banter series, we discusses all the fundas that I am implementing in my solopreneurship as well as in the lean startup. And those are the same fundas or the strategies as and when I am learning, I'm sharing with all of you. I hope all of you solopreneurs, lean startup founders, as well as the passion project holders, you will get some of the other strategies that you are supposed to take it on a practical lines to implement in your own project. And that's what this Bootstrap Banter series is all about. Let me know what are the topics, what are the subjects that you like to discuss, what are the strategies that you're looking forward to hear, what kind of use cases that you would like to go deeper down. Do write to me at pranali at passionatepulse.com, and I'll be taking all your feedbacks into the considerations and making sure in my future episodes I address all your concerns, all your questions. So let's deep dive. As promised in the previous episode, this episode is gonna be all about how you're supposed to work on your finance priorities as an aspiring entrepreneurs. What are some of the important things that we should be very, very careful, where we should be frugal, where we should be investing, and how we are supposed to manage our projects, our startups, our solopreneurships. So that's what this episode is all about. I'm also one of you. So I do resonate a lot of pain points that you're going through right now. And some way or the other, I've found some of the other solutions which are making my system work in a much better way. And that's why I'm sharing all those fundas with you. So let's deep dive on some of the finance hacks that, as a bootstrap banter, as a solopreneur, as a lean startup founder, one should definitely know. We always feel like money is constantly slipping through our fingers. As solopreneur, we are shelling out more than what should have been. We always struggle to stay cash positive without having the investor or the funding rounds for us because our projects are just starting up. They are not yet showing the traction. So that is a constant dilemma that we all go through. But how about we try to break down these finance hacks that will help you manage your money, that will help you grow sustainability and keep your business lean without compromising the quality? I think when, as a startup founder or without having any investment backup, when you're starting out on your own, or maybe you do have a funding, but you have to be very, very frugal about how you're managing that particular funding, how you are spending your budget. If estimations that you have provided to your investors are not coming through, then also you are in the same trouble as if somebody else is working with their own bootstrap budget. So it is very essential to bank on a quality and making sure the products and the services that you're building are coming to the topmost quality that you could offer to your customers. I definitely understand that there is always a lot of operations that we get engaged in. And in order to hire people or in order to delegate, you kind of, overspend your operational budget. And sometimes a lot of expenses come at different costs that you are not accounting it before, so you always need to have that unknown variable in your finance bracket as well. So before we deep dive, I first would like to mention that how you're really breaking out your week, that is a most essential factor to drive whether you can keep up with your finance tracking or no. And the reason I tell you is, as often as a solopreneurs or a startup founders or whoever you are building your own products or services, we are very, very engaged in what we are supposed to build out. And there are tons of angles in which we are working and we are stretching ourselves too thin in entire day. So that's where I always asked anyone who like to book a strategy session with me and try to address their pain points, that the first question that I always have is how you are really breaking down your week, what is your theme of the month, what is your quarter looks like, and why you're not putting a strategy around it, why you're not putting in your planning head around it. So these are like some of the very basic questions. But if you start answering to yourself, I think half of the time your dilemma will get resolved. And then you sort of make use of that time to address some of the important questions. Whether are you in a position to scale up in terms of acquiring customers? Do you want to make your product little bit of a high ticket and provide more quality to it, or add certain quality factors to it so that you can upsell your product? So those are the things that you'll have to think through. But having a week managed in a way that you have a time to look at your finances, even an hour in a week's time will help you the most to help you gauge around whether you should be focusing on your cash flow efforts upcoming week or upcoming months, or you should be focusing about where you should be cutting down certain costs which are just not necessary. Having said that, how do you do that? I mean, you can always say that, okay, I reserve my Saturday or I reserve my Sunday as and when the weekend starts progressing. And since this is a very lowest priority task, we tend to miss out. So, my first advice or my first strategy to gauge on my finances, I have totally flipped since 2025. And I'm trying to put together my Friday morning time just to analyze on the finances. It could be as simple as going through your entire cash flow management or your CRM, or it could also be as just looking at your bookkeeping that talks about where you're spending, how you're spending. There are various tools that gives you even a graph on top of your bookkeeping. I will be definitely discussing all those tools with you so that you can make use of them and see whether they are helping you out. But whichever method that you are using up, I would say Friday morning is my time. Maybe for you it could be Wednesday morning, but for somebody it could be Monday morning, because they are dealing into very stringent finances and they want to put that as a first priority of the week. So, whatever it is, just figure out the day that works out for you and reserve that particular hour for your work week. Just take out that time. When I was looking at, like, the way how I should relate this and how I should be very, very disciplined as a solopreneur, as a startup founder, when I'm building out products, when I'm building out the service industry content or whatever it is, I realize that there is a huge discipline that has upper hand to move forward and give you a no-brainer or that decision-making dilemma that we dwell into many a times. Oftentimes, whenever we are going ahead and doing this debate, whether to use this time for this particular task or whether to use this particular time for maybe managing your finance, which is your major pain point. But eliminating the confusions is what will help you move forward in your own game. So do that. Try to have less decision making round balls that goes in a day and day out, or even at the particular moment when you are approaching and then you're defining what sort of a work that you should be picking up and which sort of a work that you should let it go. So I think having your calendar managed, maybe you can do that color theme calendar and then have it arranged. If finance being your one of the critical factor to look at particular month, then you might use a color code as a red and keep it down there. And if I have to really give you the analogy of this, the visual boarding and the calendar blocking that I do for myself, anything important that goes in has to flash out red for me. Anything that goes at a, which is, helping me energize or giving me that sort of a strength in the business to move forward, the certain type of task. It could be R&D, it could be reading, it could be writing, it could be anything that, helps you move further and gives you that strength. That calendar code could be yellow. And then certain tasks which you have to work with your customers, with your own counterpart teams, then it could be blue. So just giving you some random colors to pick from, if in case you're thinking that I don't know which colors to pick on and how they resonate with me. So these are like simple color themes that I just reveal, just three colors, and you just kind of, move with one after the another. And with that, you kind of have that important of attending a particular task in your mind. Also, if I really look at in a very fictional way how you manage your finance day, and if I really have to look at, how South Asian cultures have really have been ingrained or have evolved, or even now, although a lot of people don't follow a lot of religious stuff in their own day-to-day routine, still there are a lot of practices that inherently as a family we are bound to do certain things. So if I really have to, resonate that philosophy with our South Asian certain ritual practices, although most of us are not fine tuning on a day to day basis on a lot of stuff, but there is still a theme around that every family follows, and they know that, okay, this particular day means particular god. So for example, the Sunday opens with the Lord Surya, or the sun god, and we believe that it brings a vitality and success, and it's highly energetic day that way. The Monday being the Lord Shiva's day, the deity of destruction and transformation. So that day you might want to reserve for certain things that will transform your business. That day you'll do something that will do a very constructive job as a creator job, and you might want to dedicate your particular day on that line, whichever tasks that fall into that transformation sides or the construction side or the creativity side of your brain. Maybe you want to, pick up those tasks on that particular day and streamline yourself. The Tuesday being the Lord Hanuman's or the monkey god's day, and also it is known to, some of them celebrate to Lord Ganesha, some of them to Durga goddess or the Kali goddess. But looking at how it is, it's more of like a strength, or more of a devotional, or more of a followership that you want to do. Many a times Tuesday I follow up on a lot of emails that I have forgotten to catch hold of. I follow up on a lot of customer conversations that have slipped through my mind. So those are the days that you might want to do. I also have the Giving Tuesdays. I also have an hour, which is a Giving Tuesday hour, which I make sure that I dedicatedly use it either to contribute to any of the communities by adding meaningful comments or providing certain use cases that they're looking forward to. There are many other who are seeking help groups or Snapchat groups. I make sure I go and contribute there as meaningfully as I could in that particular hour. So that is something I do on Tuesday. That also brings me a strength, that brings me a sense of dedication to what I am committed to as a community builder, how I can devote my time. But this is just to tell you that this is something you could follow and think about what sort of business angles you have, which particular tasks fall in which bucket, and how you could pick it up. Then the Wednesday, which is, the planet Mercury or the Lord Krishna's day. So that time I make sure that, it is more or less, it is incarnation. So it's more or less that you're picking up some plain tasks which are requiring to attempt in a very fresh manner. Sometimes it could be a mundane task that you would pick up, but at the same time, they do add a significant meaning in your business, in your solopreneurship, or in a day to day activities that will move you fast. Doing that smart work on that particular day, although it could be something that you're not enjoying, but you're kind of pushing it forward by adding your own creativity angle to it and attempting it in a way that this is the work that is gonna sustain me for a longer time. Thursday being the Lord Vishnu's day, and it is also kind of a powerful day in terms of, if you are looking forward to start something or maintain something, or giving some different powerful acts of your maybe a pre-sales day. So, instead of a sale, you do all the preparatory work that needs the sale to have it done. And it could be as simple as some marketing work of or pre-planning and figuring out whether the media kits are ready, whether the proposals that you're planning to send that has to get ready. So all the administrative part of the sales process, you want to do that. And Friday, which is a Mother Goddess, the Mahalakshmi, or it's a Lakshmi day, we say. That's where the wealth comes in. So you might want to dedicate that day for the finance and see whether that day you can close down your customers billing cycle, or you want to send out certain reminders. So think about that theme and work it around. And Saturday, which is kind of elevating the bad influences from the Lord Shani or the Saturn, that's what they generally say. You should take a break and see what has worked, what has not worked, and what you want to change. And just try to eliminate your own obstacles. So I think that's the sort of in general a theme that I narrated to you, the one that I kind of have the family practices brought in, and then I'm trying to relate now with all of this. How do I make myself more disciplined as a startup founder, as a solopreneur? And that's what I have ended up sharing with you. And I hope that, kind of moves you in your direction as well. I'm sure, like, once you have that discipline, then sorting a lot of things becomes much easy. I'm sure that has happened in the past to me. I have seen a lot of my coaching clients have got that difference once they became more disciplined. They have seen that the needles may not be moving as fast as possible, but at least they are in a slow, steady, and in the right direction to find out they will meet destination one day versus walking 100 steps in the wrong direction. At least march 5 steps in right direction because you're very certain about your destination in that way. Let's deep dive about the finance hacks. So, the first and the most important burning problem that I like to address whenever you're working as a solopreneur or a startup founder, the fast and a farming cycle, the one that needs to be broken and have to have a consistent cash flow in your business. So, feast and famine cycle, I'm not sure if you have heard of, but it is like some part of your year are very, very busy. That is a season to make a business, but some part of the year which is not that a great season for either to your product, either to your service, that farming kind of a timeline that you will be dwelling into. So that is a cycle, and you have to consistently look at that let's say when you're just beginning out, this feast and famine cycle is gonna be there. You might be someone who is working in a very seasonal industry, and the farming cycle is something that you cannot overcome. For example, you're selling certain creative products, and maybe creating a merch, and your merch is something that is in a very particular niche, so only certain months are going to give you a business, not the otherwise. So in order to break that cycle as a solopreneur or as a startup founder, can you acquire certain B2B customers which can still help you give a steady cash flow in the months that your products are not selling? I mean, are there any other strategies that you can align and find out what you could do the least to break that cycle? So that's something to think about. If you have not thought through and you have not analyzed your year, or maybe you're just beginning out and you just don't know how the month turns out to be, what sort of efforts needs to be done, whether you're walking in the right direction or no. So there are tons of questions that are always there, but you need a sounding board for it. So the best way that I feel is, unless and until one does a retrospection, there is no business coach, there is no counselor, there is no strategic partner could help you navigate your steering wheel. So first sit down and try to analyze what's happening. At least you should know the problems that you're facing. If you're not able to anticipate that, then nobody is going to help you about it. So the feast and famine cycle, first try to see whether it is there in your particular business. If it is, then what are the possible ways with which you could break that? Is it something that you can adopt to subscription based model where you make payments easier for your clients, but at the same time you have the cash flow going on every month? Or is it something that you're providing a service with which you could take in 50% in advance and 50% after the service is provided? Or it could be even breaking into 50-30-20 rule. Is it possible to do that? Just figure it out whether 50-30-20 rule is applicable for you to split the payments, or it could be vice versa, 20-30-50. As in, when your customer starts valuing, finding the value in your product or services, can you bundle up the packages together and upsell them and provide more value to what you're selling? You really have to think through about it and then package accordingly and find out whether that has worked most. So offer all these different sort of invoicing and see whether that is something is keeping your cash flow on an ongoing basis, and that way you are very relaxed that at least your operational expenses are cut down with the retainer clients that you have. The last weekend, actually, I must tell you this story. The last weekend I was out for certain training, and in that training, they were talking about how to build the certain business or scale up to a franchisee level. And while doing that, the first and of very most basic principle that every scale up comes down to is how you define your own processes well. Unless you have a formula defined for your smallest business, you won't be able to scale up that. So that's what they were like emphasizing about the processes, that no matter what, you don't want to go out of that rule book because you know that particular formula has worked and you can bang on to that, and then the replication becomes easier, and that's where this processes comes into the picture. Anytime when this finance has to be looked out and anytime you have to retain the customer, there is one process that talks about the major cash flow in your business that comes through is by retaining your customer on a longer term basis. Acquiring your customer is, yes, on top of the pyramid, it does achieve a lot of value. Newer customers, newer opportunities gives you the tons of a business. But at the same time, if your retainer is losing out, if your long term customers, you cannot have the long term customers, then every now and then you are bound to fall in a trap of the process of now what, where the cash flow should come around. So it is like a pyramid structure that talks about the base of your operational business should come from your existing customers, and retaining the customers should be your uttermost priority, whatever the business you are in. It could also be certain transactional businesses where your previous customer may not walk in, but can you find out that execution level, or can you find out that Q factor that you can add in your business to have this retention done well? If I just have to talk about a very niche industry example and talk about like in certain things it is just not possible. For example, the podcast industry that I am in, my guest podcast, the guest podcast, they don't want to come again and again on a frequent basis. They cannot be the retainer level customer base that I should be looking at. But what else can be done in terms of a podcasting? Here is my guest who have come to the podcast guest. Let's say if they have come for their any of the promotions, but they are just looking out for that short term period of work. After that, what happens? Then can I open my network to them? And can I see whether they find value with them? If yes, then can we work together to curate certain events where we constantly have the certain businesses or business founders coming in and advertising on our show? Can they help us sponsoring some of our podcast series to move us forward? At the same time, their business gains a visibility, a strong visibility for certain amount of time. And how can we make this valuable to them? What else we could add? So those are some of the factors to think through. But my question is, although your business could be not a very transactional level, you have to find out what else you could add. That is what we call it as a Q factor, a quality factor, or sometimes it is also a quotient factor that you could add to make sure that your existing customer becomes your retaining customer. And the other important thing that I learned in the last week workshop was whenever you're looking at the retention, try to give as much value as to your existing customers. Let's say you decide, like, I'm putting out a new package together and I'm increasing my delta from X to Y. And then that is what I'm planning to sell it to my new customers. That's perfectly okay. But the existing ones, are they getting hampered with your new packages? And is that the reason they could leave? then you have to take some practical gauge on it, whether the industry cost that you have provided to them, it's just an year before. And can you retain them for this particular year with the same cost? If that is the case, just go for it. You might lose a small incremental part, but you're still making sure that the cash flow in your business is steady and smooth. And that should be the first priority for any solopreneur or startup founder should be working around. So once the other customer knows that this has worked for them, they are the ones who are going to bank and tell you, your newer customers, that you know what, this particular package we got it for x amount of value, which you're getting it probably a little bit of an increased value. But since we are their old customers, our rates have not changed, and for this entire year, or as per the contract for next couple of years, we'll be locking down the same rate with them, and we are doing the business. And then that's when your new customers are gonna get happier to understand that the possibility of changing the rates with you is not that frequent, and that's going to be a very steady thing for them also to count upon, or count upon your service, count upon your product. And that's when they are also looking forward to their business growth, that they know that a particular expense is not going to vary much, and I don't have to keep switching from one place to another. But this is important area to look forward to, and this is the exact thing that I learned while scaling up. The certain founders do mistake, and this is one of the mistake that they do. They cannot retain their customers. So maybe you have to finalize and formalize your contract terms on a long term basis and provide the value to your customers to make sure. That's the first and most important thing you should remember is it is for your own cash flow in a business, to make sure that there is a steady income that's happening throughout a year, and you're breaking that famine cycle. The second thing that we talk about, the subscription based, which you could change, but again, make sure that there is some contract in place so that that subscription converts to annual or biannual, or whatever term that you're looking forward to, whether it's 3 year, 5 year term of your customers. But make sure that there is some sort of that formal agreement in a place and you work with that. There are upfront deposits from clients one could always take. There are various businesses where you need to have certain principal amount put down. Maybe think about, can you convert that principal amount, saying that this is a deposit you're taking, and once you convert that particular business after a month or two, and you start building your project with them, whatever it is, then that same deposit gets converted to your billing cycle. So that means you will nullify the deposit, but at the same time you're making sure that there is a two-way association or two-way terms that have been in place, and your client is very well aware after a certain amount of time you decide to leave, then that particular deposit is either waived off, or prior to that, if you decide to terminate for whatever reason, then you still owe your subscription cost, but the deposit is something that is not refundable or going forward. So you have to find out what are those ways with which you could manage your cash flow and avoiding this particular low high cycle that we are looking forward to. Let me know if you're going to implement one of these three tricks. If yes, do write it to me on Pranali at passionatepulse.com and tell me that what is that one hack that you're planning to implement, that you know that exists, but have still not made an attempt in your own business to work it out, or creating that creative cash flow in your business, and you really have not practically implemented it, and going forward you will do that, or after doing that, do give the feedback at Pranali at passionatepulse.com. I'll be happy to listen to you and happy to engage with you in the further discussion and to see what really made that difference. And we could talk about your business over the podcast in this Bootstrap Banter series, and understand that this particular cash flow management is working out for certain type of a business, and then our community can benefit through that. Next, and a more important thing is, how do you grow without any investment, without a VC money? Your product could be not something which is a tech savvy. Your product could be something which is not gonna get VC funding immediately unless you see the traction in your business. Then what are some of the ways to do it? I have told tons of time that bootstrapping is fun, but at the same time you have to be very smart in taking your steps. So the first thing that the bootstrappers should always do is, before building out, can we have a pre-orders? Can we build your interest list? Can you do something of that sort? It could be simple as, advertising that a certain type of a product that you're building, and just taking a simple poll, are you interested in this or are you interested in this? Giving them a to B testing, or validating your own ideas whether this will work or this will not. It could be a simple LinkedIn poll. It could be a simple social media polls. Or it could be through your own emails to your existing customers where you're reaching out to them and trying to gather an interest whether this is something work or no. Find out whether you could start certain ways to do the pre-order. Can you boost your ad on the social media and build something that talks about the free webinars that you're giving, or the free sessions that you're planning to give out, or whatever it is? Just try to see whether there is an interest list building with the pre-order. And pre-order could not be really someone has to put down a money forward. If your product is something that you're giving at a pre-order basis, and they are planning to purchase it at a higher price once your product is in the market, that time pre-order with purchase makes more sense. That way you also gather a lot of deposit before you build out a product or before the product is out in the market. But at the same time, your customer is going to get that particular product at reduced rate as they become your first investor, and they are the ones who are providing you the seed for the product to be built. So can you think about this, and is it possible? Tesla, back in the days, Tesla had done that. They took a lot of pre-orders, even to Tesla 3 model when they launched. For Roadster model when they launched, they put down certain fraction amount of principal to get to know that they're very much interested in the product and they want to get it in certain timelines. So they were like, putting down them on a wait list, but that wait list had cost associated with it. So you have to figure out what your product is, and based on that, you think about whether pre-order deserves a cash and then gather some of the funds, or whether it doesn't. And at least it can give you the traction to make sure or validate your ideas. The second thing is a crowdfunding. There are tons of crowdfunding platforms I've already covered on my podcast, True Karma and Milap. Both of them are equally good. There are different crowdfunding platforms that every one of us know: Kickstarter, Indigo, even GoFundMe. You have to find out because every portal towards the end is charging you certain amount. So, even for example, Kickstarter takes 5% of your crowdfunding gathered amount, as their platform fee. So you have to be very wise in picking your platforms. So Mila, for example, I know they don't charge the platform fee. True Karma, I know they charge very minimal platform fee depending on which type of business you are in. So Mila, for healthcare reasons, I think they don't charge fees. True Karma also, for healthcare reasons, they don't charge fees. But if it is for profitable crowdfunding that you're looking out, there are very very lean amount of percentage that you're looking forward to breaking up as a platform fee versus the other. So, choose your crowdfunding platforms wisely and go ahead and check out those Passionate Pulse podcasts over YouTube, Apple, Spotify, whichever mediums you are tuning in, if you want to understand more on those particular crowdfunding platforms. And let me know what else you would like to hear, what sort of startup founders you'd like to cover on our podcast as well. So that's the second thing that we learned about crowdfunding. The third one is, revenue based financing. So you could always figure out whether there are any small banks or there are some other finance lenders, those are available, who are ready to scale with your revenue and not with your interest. So there are certain fundings that are available based on your revenue. They will take certain percentage of it versus a certain amount of fixed interest that is, qualified for particular year or whatever it is. So there are these creative financing ways also exist. If you're someone who is not getting an investment from different third parties or from your own angels, these are also some options you could look out. The other one that I like to mention is grants. Tons of grants are available, starting with private to public. Each county, each state, and each country has certain either federal and state grants reserved for certain type of businesses. So for that, what you need to do is, as and when I'm filling out the grant applications, what I have learned is the important thing is you should know what impact you are achieving. It could be non-profit, it could be profit. Either ways, at the end, your product your service is bound to solve some community problems. Unless and until there is a people and a problem exists, your product or service is not going to have a value. So once you have that strong, unique proposition that talks about this, filling out the grant applications become much easy. Now it's a matter of fact, like how do I find the grants? Maybe you should do a very separate and a dedicated episode on top of it, that there are various grants exist, starting with the women grants, different diversity grants, a particular product grants, like, it could be for the tech, it could be non-tech, or whether you're building up a factory for certain manufacturing. So there are tons of businesses that empowers this economy, that contributes back to this social economy. So you have to get that one is to one proposition for your own business, the problems that you're solving, and based on that, finding the grants, filling out the applications, and then trying out your opportunities, because this could also come at a very minimal way to you, without asking for your equity dilution, without asking for any feedback on every monthly basis. But at the same time, once you receive the grants, you are obliged to provide how you have used, and certain type of a things. So before getting a grant also, you're obliged to pitch them as if you're pitching to any investor. And after getting the grants also, government wants to make sure that you are the one who is utilizing the funds in the right direction and trying to achieve the same metrics that you have asked before. Now, coming back to very important factor, how do you really do the finance automation? What are some of the right tools that you should be taking? There are many invoicing, payments, and a bookkeeping solutions that exist today. The one that I used for my invoicing actually is Wave. The Wave offers you a free tier and can help you create in as many invoices as possible with your own branding, as much as free. It can also have the facility of taking your online payment. However, what I found out is the online payment through Wave, if you have to, receive from your customers, it adds almost similar to what Stripe offers, the deductions, but little bit of extra. They charge 0.60 cents per transaction, versus Stripe may charge you 0.30 cents per transaction. So figure out whether that is effective if you're getting all the free services, and can you pay out that delta to that transaction just by availing the free tool? Or you want to upgrade yourself and pay certain licenses fees and waive off completely these transaction fees. So there are those options also. The other options you could also think about is your own business banking account. Are they avoiding any kind of transaction fees just because you are their customer? Do they have a good merchant tie-ups for the smallest business, or the small business that you are in, and can they still give you that kind of a value? There are multiple banks that I've found are doing much better. There are certain financial transactional portals, like there are certain fintech portals basically who also offer you a good benefits. For example, this Meow technology, I just recently got to know about it from one of my startup founder friend. For my own startup, where I have to solve certain issues remotely, paying out to my own contractors or to my part-time employees, and I wanted to have certain account with which I could do the transaction, for which I don't have to do my bookkeeping, raising the invoice or whatever it is. But at the same time, it should also waive off my wire transaction fees. And that's when somebody suggested me that Meow technologies is something that is good with. Just do your own R&D and D and see whether that is of right fit for you. But my job is just to tell you that these are the tools that I've explored. So when I talk about the invoicing and payment, of course, Wave and QuickBooks and FreshBooks, all three are doing the good job. Wave being offering me all the free tier services, and at the same time, it might charge you little extra, but you have to find out whether in an year, if you're doing 10 transactions and you will end up paying $10 to the deductions, then can you avail a little bit of a $10 subscription fee for the entire year or a month or whatever it is, and then see whether that is giving you the edge of getting more advantages in your transactions, especially if you are in a business where invoicing and online payment is mandatory. So just figure out that. The other thing is budget and expense tracking. So there is Mint, everybody knows that software. It's free of cost. That comes. It does listen to your transactions and it gives you the good pie chart or different type of a chart. Zoho is another solution that can offer you. So that also has a free tier, I believe, and you can make it work. There is another one. You need a budget. That is another expense tracking and a bookkeeping software that I know that is doing wonders to many. I haven't used that personally. I'm using the Mint. So I know that is giving me the kind of a chart that I'm looking out, the expense wise, it can break down well and help me understand how my expenses are on particular business account. Can you do certain automated savings and tax handling? Of course, yes. There are different, as I said, like fintech solutions which can help you. Digit, Nova Bank, as well as the MAV technologies, where if you're saving and also you want to do certain the tax handling part, there are certain ways with that solutions can help you understand how much tax you'll end up paying, and whatever that you are putting in your checking or savings account, sometimes they also yield you a little bit of an extra interest. So you want to check all these solutions and see whether they are the ones which is working out best for you. Other thing I would like to mention in terms of invoicing, bookkeeping, or this automated saving is, as a founder or as a solopreneur or as a startup founder, anytime the first thing that we look at it is like how our products, how our services, how our projects grow big. That is our first priority. As the owner of that business, as a mother of that business, as a father of that business, this is what we do. Like, we want to groom our business to an extent that it should scale up and take a good leap. So while doing that, the oftentimes we forget to consider our own salary or find out our own profits, whatever the business that we are generating with the certain transactions or the revenue that has come up. We try to pour the entire amount back to our own business so that it grows well. Then we might do more staffing, we might find out more softwares where we could invest in and try to become more fancy and fancier. So that is where another burnout comes. So the important strategy to use in this way is, and again, as I said, this 2025 being my most resolutionary year, I feel I have put down a lot of action plans together and I'm implementing that. So anytime that I generate any sort of revenue, now I have started putting out 1% of that revenue, 1% of that cash generated from the business is adding to my own personal savings. From my business, there is a business account which has checking and saving. And in that saving, I would move that particular amount, just a 1% of it. Suppose if you make $1,000 of transaction, then you're just talking about a $10 here, right? If you're making $100, you're just talking about a $1 here. So that 1% you automate and move it to different account and label that as a profit. So it is not the matter of whether you're moving up 1%, 20%, 25%, or 30%. Depending on what are your ticket sizes, you have to, really find out whether that is going to work out. But at a very initial stage, when the solopreneurs are just starting out and the operational overhead and the expenses are more than what they're actually generating in order to, establish their brand, I think 1% or even a 0.5% is a good rule to start with. And this rule is something, the profit first mentality. It's not something that I've invented. It is invented by a dear Mike Michalowicz, who talks about often the solopreneurs, the passionpreneurs, the startup founders, or the business owners. In the initial time, they go through this huge burnout because they don't see where the profit is going. Everything that they get is sort of they're reinvesting in others. So this is something that you wanna try out and see whether that is giving you little bit of a more confidence on your business. If not, then what is the other technique you would do? Help me out. I am also here to listen to. But as I told you, I am reserving that 1% as my profit and not touching those funds. And the rest other funds are going into the operational management, the staffing payment, or certain softwares that you need to have it in your business, or even to certain services that you need to have in order to flourish your business. Maybe you're integrating with third party vendors to do certain amount of tasks and their billing cycles are inherent. So you need to have that cash flow in your business. But see if you could, work out on this lean methodology and the prioritizing your profitability over the growth. So just focus on this cash flow management, reducing your unnecessary expenses, which I really don't have to talk about much, but charging your customers early and ensuring a sustainability can also be your revenue model. So just figure out what is your revenue model, what kind of a stability that you can bring it to your businesses, how you're looking at when you're looking forward for the next growth. Because every time when you have to acquire a new customer or opening up new market opportunities for you, you also have to pay extra additional cost for your visibility in different way, something that is going to come to your way. But while using this visibility or while acquiring the new customer base, think very smartly about the partnerships and the collaborations you could open with other businesses. Can you smartly barter with somebody else? That let's say you have a great product that could go as somebody's merch, and someone else who is in the constant business of public facing, can you barter saying that, this is the merch that I have, and you could gift it to your public facing businesses for your own customers. The only thing I request is having my name tag or having my business tag attached to it. Can we do this kind of a partnership? Or there are other partnerships. For example, somebody is hosting an event and you have a business to market, but you just cannot afford a booth over there. But can you do something with which you could get into the partnership and figure it out how that booth can come at little bit of an extra saving to you? Can you shell out your expertise to their event and build their event much more profitable, bring more attendees to that event? And then, can you generate something out of it and opt for a certain service that you could? So, those are also the options you can think about creatively and see whether they work. I'm sure there are ways to collaborate with other businesses with which you are always opening up your new market opportunities, your new customer you could be acquiring. Don't at all lose the focus from your existing customers. Make sure that your existing customers retain for a longer time. It could be laying out the long term contracts that's in your vicinity, and that's possible. So now coming back and talking about certain businesses that really bootstrap well, that scale successfully by adopting very creative or what we say is a guerrilla marketing technique. The Zapier's example, if I look at, it was literally a side project that turned to a $5 billion company today. It was even refused an entry at a Y Combinator at first, but then they slowly and gradually bootstrapped and they did it very well. Just the help of Reddit forums, the Quora forums, they sort of acquired their customers. They were very focused on early revenue generation. Initially, they gave lot of integrations for free to lot of their beta customers, and once they found it, then they started charging or a $5. That's it, the minimized cost that they could. But they made sure that they're getting paid customers to start with, building the interest list and finding the value in their particular product. MailChimp is another business that got sold out for $12 billion without any VC funding to Intuit. It did use a freemium model. Even still, they do have a freemium model to attract the new users and convert them to a paying customers. But what they did was they reinvested the entire profit into the product development rather than seeking an external funding. So what I'm trying to tell you is when lot of products are emerging and the VC funding is shrinking, you have to opt for these strategic moves, what you could do best to get things done. Then there is another startup that I like to mention, which is a base camp. It really grew sustainability with a very small and an efficient team. And it did have the profit first business model. It adopted a subscription based model to ensure the consistent revenue. So, the consistency is the key here for the cash flow. So, find out there are other examples from different industry that I like to give. And the important one that I like to mention is the RX bar. I'm not sure. We have never seen RX bar in the malls first, but it was first figured out from the CrossFit or the small gyms and certain online channels where somebody in the athlete business, somebody in the fitness business were talking about the RX bar or were selling in the partnership. So they were very focused on direct sales through the gyms and the online channels, which were in specifically targeted in the fitness industry. And they scaled profitability without raising a venture capital or even without going to this retail business first. So rather than having the product lying down on the shelf for a longer time, they preferred a very targeted customers. So I think that's a very smart move, finding your customers and partnering or doing the revenue share with certain partners. So I think that is something is also an option. You just have to think through that what your business is, what you could do best, how you can find a creative ways to partner with somebody. There are tons of examples of startups who have turned to the billion-dollar companies without having an investment, and just on their customer revenues they are surviving and they scaled up too. No matter whether you get an investment or no, more or less your cash flow has to be constant. More or less your customer acquisition has to grow. Your existing customers needs to retain. So that basic principle is not going to fade away whether you have an investment or you don't. So my question is whether you are at a stature of doing your own bootstrap and reserving certain funds, can you work out smartly with that? Can you make sure that your customer acquisition strategy becomes your foremost so that your cash flow becomes constant and you go with the profit first mindset and excel at your business? So whichever business, whichever industry it is, can you adopt to that mentality and can you work on that particular theme in this 2025 years? If yes, do write it to me at pranali at passionatepulse.com. I'm eager to hear what you're going to implement, what creative things you're gonna do. And if I get to know your story and that something comes with our future podcast episodes relevant, I like to share that with your name, business, and everything. So do share your feedback on it, what you're planning to implement if you haven't already, what has worked well for you, what hasn't worked well for you. And do mention with your name, your business name, where in which area your business is, and all this information, I'm going to share it in my future podcast episodes over the Bootstrap Banter that will help others know that there are a lot of other real people, apart from the unicorn stories that we talk about, that exist for real. And they do implement certain of these kind of strategies. And their revenue goes from $0 to $10 maybe, or $0 to $100 maybe. Whatever it is, that is your win. It's not the ticket size that matters, it's that delta success that matters, it's that incremental success that matters. And every step is, when we look at wherever we are, every step is a teeny weeny step for us. But towards the end of our journey, those teeny weeny steps is what is gonna help you climb the mountain. So let me know how you're gonna stay cash flow positive and what is the best finance tip that you have ever taken for this particular episode. Do write it to me at pranali at passionatepulse.com for any of our services, for any of consultations to book my calendar from passionatepulse.com contact and find out what works out for you and find out whether you would like to work with us. If you have a business and if you have a story and would like to cover it on the Passionate Pulse guest podcast, we are always here. And we are soon launching up a Capital Pulse series where, we'll be talking with lot of investors, a lot of VCs who will be talking in this particular series how the funding gets open, what they really look forward when they are looking forward to invest in the businesses. Whether it's just the tech businesses that takes of the VC funding, or can it be also the non-tech or the retail businesses are still driving a lot of VC funding. So we are going to have all these diverse discussions. Also the investment with sectors, investment with the certain geographies, a certain portfolio, whatever the portfolio, the product portfolio wise, we are going to have that talk series coming up soon. If you are someone who is an angel investor or a part of a VC fund or a partner or general partner, whoever you are, and you have great study to help our audience understand how the funding economy works, we'll like to take you on the Capital Pulse series. Do write it to me at pranali at passionatepulse.com or simply send an email to info at passionatepulse.com asking about Capital Pulse and finding out the guest spot reservations. If you're someone who is looking to advertise your business on our radio episodes or our podcast episodes, do let us know. Just write it to us at pranali at passionatepulse.com or info at passionatepulse.com. And we'll reach out to you and we'll see how we could work together, how we can provide you more visibility mediums, how we could cover your story so that our audience gets benefited through your story, and whatever product or business you are in, how we can add more value from our own side. Do let me know what you'd like to hear out next. In the next episode, we will be talking about some different bootstrapping funda that will help elevate your own business. Stay tuned and make sure that you implement at least one different finance strategy starting this week. Don't forget to sit down on this particular Friday to analyze your finance or just do your bookkeeping. Till then, stay well, stay passionate. Ciao.